Thank you very much for joining us. We want to talk a little bit today about financial financing and obtaining capital for small businesses, especially CDFIs. Hold on, I've got the meeting note recording notice in my across the screen. When you're thinking about financing your business, you need to think about how much money you need to start, how much money you will need to operate for the first 2 years at least, how much money you can invest and how much you will borrow, and where are you going to get the funding, especially if you're a startup or an emerging business or a small sole proprietorship. So you may have heard of CDFIs. Most people have not. In fact, many borrowers who have borrowed money from CDFIs have never heard of them and don't even know they're CDFI borrowers. But we're going to tell you a little bit about that today because it is a special program that helps folks who have may have barriers to achieving capital elsewhere. Next slide, Melissa. So there are different ways that you could fund your small business. Everyone would love to have grants, but they really are rare. They exist, but grants for small businesses, for-profit businesses are rare. One of the places you can look for them is local government programs. They have good opportunities, especially in areas that have active revitalization programs. For example, if your business is located in a designated Main Street area, of which there are 7 in Baltimore City, I believe there's still 7, you may qualify for a matching facade grant up to $6,000 where you improve the front of your facade and they will match up to $6,000 for that investment. Grant programs also are available for-profit businesses in certain industries. It tends to be what is popular at the time. For example, the NEA has some grant programs for arts businesses, especially art education in underserved neighborhoods, sometimes for special projects like man-woman sculptors in front of train stations. Sometimes for clean energy was a popular grant program for a while. And often you see grants for affordable housing, and those particular industries may have grants for-profit businesses in addition to nonprofit grants. Private investment is basically your own money, your mother's money, anyone else, your friends that can donate to your business. That's all private investment. And then you've all heard about angel investors. Angel investors tend to come with mentorship and expertise, but when you have an investor, you are giving up a percentage ownership in your business for that investment. Not everyone is willing to do that. Often angel investment organizations focus on specific industries. Right now, tech industries, high-tech industries are very popular, and a lot of them are focusing strictly on that. In Baltimore, there are organizations like Baltimore Angels, Entrepreneurs of Maryland, TEDCO, etc. Make sure if you're talking to an angel investor that you're check them out first, see who they've given money to before, and then you can get an idea of what kind of businesses they support. Then there's crowdfunding. It's available on a number of platforms, but the actual viral success stories are small. Some of these platforms are curated, some are automated. Various sites like Kickstarter, Indiegogo, GoFundMe, Seed Invest, they can cater to different markets. Some cater to creative ventures or nonprofits or startups or personal causes. The different types of crowdfunding can include rewards, which is basically pre-sales of a product. We've had several clients who were able to raise, say, between $10,000 and $25,000 by pre-selling a product through crowdfunding. That's the one that I see most often as successful. And also a reward, like if you invest in a movie, for example, movie production, if it makes a profit, you may get a percentage back from that. But most movies that are built on crowdfunding rarely see that kind of profit, but fingers crossed. Debt is a growing platform for crowdfunding where borrowers submit their loan requirements on the platform, and then they're matched with investors who are interested in making the loan. Kiva, for example, and the Lending Club. Kiva was a program started in Africa and has since come to the United States, and they are in Baltimore. And it's a crowdfunding platform for zero interest loans. You have to do a lot of work for that. You have to bring your first number of investors to your offer, and then you can get a Kiva loan. They tend to be very small. They're limited to 10,000, but most of them are under 1,000. And then there are equity investors, just like private investors, who it's a pool of investors who look at a project and decide they want to make a loan in exchange for equity, or an investment in exchange for equity. And then, of course, there's charity, which is what everyone thinks of. Charity is the one that everybody thinks about, but those are typically reserved for, again, your mother, or, Elvis Presley and a piece of toast or something is the ones that you hear about on the charity investments. One thing I have learned is that many of these platforms have how-to programs that they will do a little free training session for you ahead of time with advice about how to raise funds on their platform. And it is worth the time doing it. They're usually free and they can be very helpful. I've seen some people use those and were successful because they followed the guidelines of the platform itself. And then, of course, there's loans from banks, government agencies, nonprofits, and SBA lenders. Next slide. So loans, typically banks and credit unions make small business loans. But if a bank turns you down, you don't want to stop there. The bank is really the high end of small business lending. It's where you're going to end up, not really where you're going to start. There are CDFIs, which is a community development financial institution, a private financial institution that provides credit and financial services to underserved markets and populations. And I'll talk a little bit more about that in a minute. There are some local government programs that provide small business loans. There are some good opportunities in certain areas. They tend to be city or county wide programs. Most cities or counties have economic development departments, business and economic development. Sometimes they may call it commerce, and they have loan funds. For example, they may get loan funds when there was casino money out there to be loaned. A lot of the local county business development organizations got funds to make small business loans. If they don't have funds to make loans, they will know who's making loans in their county. So they're a good resource no matter what. And most of their assistance, aside from lending, obviously, but most of their assistance is free. And then there are fintech lenders. Now, this is a growing trend, and as it's becoming more popular, and certainly during COVID, more lenders are going online who are responsible lenders, but there's a lot of predatory lenders out there online. Their terms are not always what they seem. And federal laws that require certain disclosures, truth in disclosures, APRs, et cetera, so you can compare apples to apples. All of those regulations apply to consumer lending. They don't apply to small business lending. So those small business lenders are not required to be perfectly clear about how they calculate interest. We actually have refinanced a couple of loans from folks who had fintech loans. One in particular, it was a loan. She had gotten a loan for $120,000 from a fintech. They advertised online it was 10% interest. They didn't say it was compounded daily. So in the end, she ended up paying 42% interest on her loan, which is something you just never get out from under that. So we refinanced the $120,000. So she left our office with the same amount of debt she had when she walked in, but because of the refinance, she saved $15,000 a month in loan payments. So be very, very careful when you get involved with a fintech lender. Make sure it is someone who is reliable and has a good reputation. Next slide, Melissa. So CDFIs are, as I said, private financial institutions that are 100% dedicated to delivering responsible, affordable lending to low income, low wealth, and other disadvantaged people and communities to help them join the mainstream. It is a U.S. Treasury Department designation. The CDFI program started in 1994, and since then, the US Treasury has designated about 1,100 CDFIs across the country. There are 9 that are headquartered in Maryland, and 5 of them do small business lending. Not all CDFIs do small business lending. A CDFI can be a community bank. It can be a credit union, a loan fund, a microloan fund. It can even be a venture capital provider, as long as it is mission driven in underserved communities. They can help with financing family's first home. They can invest in healthcare centers, in schools, in community centers, and they can make small business loans. By financing small businesses in underserved communities, which includes micro enterprises, in some cases, nonprofit organizations, commercial real estate, affordable housing. CDFIs spark job growth and retention in hard to serve markets across the country. They strive to foster economic opportunity and revitalize neighborhoods. And they differ from traditional banks in several ways. They're typically smaller loan amounts. Banks make loans. A typical bank small business loan starts at $500,000 and goes up into the millions. The vast majority of traditional bank business loans, 80% in 2017, were for more than $1 million. And they all required significant collateral and personal guarantees. So loan size is often a barrier in itself to getting a loan from a bank, whereas CDFIs make smaller loans, typically between $5,000 and $500,000. It varies from CDFI to CDFI, and the 3 that are here today, including BCL, will tell you a little bit more about our own programs as we move through this program today. CDFIs do tend to have slightly higher interest rates than banks because they are making high risk loans that a bank generally would not make. Their loans have longer terms, which in effect have smaller monthly payments because it's spread out over a much longer term. Bank interest rates right now range from between 3 and 6% for small business lending, whereas CDFI rates currently range between 6 and 12%. And again, each CDFI is different, but this is just sort of generically the ballpark that they offer. And terms for a small business loan through a CDFI can go up to 10 years, which significantly lowers your monthly payments if you have your loan spread out over that period of time. But most importantly, CDFI lending is far more flexible and more accessible than traditional banks. For credit and eligibility requirements at banks are very stringent. I mean, we've had speakers who will tell you if your credit score is not above 680, don't even bother to call the bank. They look for more years in business. They look for a minimum revenue amount, and they tend to lend in higher loan amounts. Whereas CDFIs look at your whole picture. They listen to your story. They work with you individually. They don't have strict rules so much as work with each individual lender or borrower to determine if they are credit worthy. They don't just look at your interest rate, but they look at your credit record. I mean, your credit rate score, they look at your credit record. You can tell the difference between someone who had a bankruptcy or a health issue or even a divorce from someone who just took a trip to Mexico and didn't pay their car loan for a couple of months. So CDFIs look at all of that, and they take it all into consideration when they make their selection or their decision. Next slide, Melissa. So small business lending is really kind of a continuum. I would recommend starting with your local government programs. Give them a call and see what they have to offer. They typically have generous terms, similar to CDFIs, and sometimes lower rates because they're government funded. Kiva is one of these smaller online crowdfunding loan sources that I mentioned. And they are for typically very small loans that you can start with. Next on the scale are CDFIs that make the loans like we've been talking about. They have, pretty typical terms and much more generous eligibility and credit requirements. Then credit unions, which is kind of a step in between the CDFIs and banks. And then finally bank loans. So as you sort of move along this continuum, the loan amounts get bigger, the requirements get tougher, and the rates get lower. And that's just typically how it works. So for BCL, and I would imagine for MCE and EDG, who are also here today, I mean, our idea of success is that our clients graduate and eventually become bankable and can get larger loans for lower rates because we help them get started. And just a quick note on the SBA. The SBA, with some exceptions, does not make loans. And if you went through the process of getting a PPP loan, you will be glad to know that they don't typically make loans and they leave it up to banks to do it and other SBA lenders. The SBA guarantees loans according to SBA guidelines that are made by banks and other lenders. And in some cases, they provide capital for banks to make small business loans. They can be very difficult to qualify for. They have good interest rates, typically up to 11%, and they have terms that can go as high as 25 years. There are different types. The typical small business loan is called a 7A loan. They can start very small and they go up to $5 million. 504 loan is typically a bigger loan, long-term, to up to $5 million for major fixed assets. Microloans are small loans up to 50,000. They are much easier to qualify for, although you do have to pass a no credit elsewhere test. You have to show that you've actually been turned down for credit elsewhere. BCL just became a microloan lender, so we will be making those loans going forward. And then, of course, the SBA does make PPP loans and EIDL loans for disasters. And I will keep the politics out of that comment there because I can feel it coming on whenever I start talking about the PPP program. So they typically guarantee 50 to 85%. It reduces the risk for lenders, which encourages them to make loans they wouldn't otherwise make. The paperwork is burdensome. It's difficult to get through, which is why people typically think of SBA loans as a slow process and something hard to get. And they would be right about that. The SBA typically requires that you have a credit score of 680 or above, other than the microloan program, and a strong repayment ability, and often they require collateral. So this is where I usually launch into a story about our program, but we have several guests with us today that I want to encourage to speak first. We have two other CDFIs here, MCE and EDG, and they will tell you about their programs. And we have three small business borrowers who are here, who are going to tell you about their experience and their small businesses. I will ask Melissa to turn it over to Nick Rudolph. Nick is the Baltimore Regional Director for Maryland Capital Enterprises, MCE. And Nick, why don't you take it from here?
Sure. Thank you very much, Bonnie. Good to see you. So while Melissa's getting the PowerPoint up, there we go. Just wanted to give you a little bit of an introduction about myself. You know, why am I here talking to you? So like I said, my name is Nick Rudolph. I came into the world of small business lending from the Main Streets program. I was working on the Baltimore Main Streets and then the Maryland Main Street program, working with individual businesses, working with local governments, and just trying to help those historic commercial districts thrive. When I was with the state, I kind of got more into a bureaucratic role, didn't love not working with the businesses every day. And this opportunity at Maryland Capital Enterprises came along for me to go back doing what I really love. And I've been here since 2015. So thank you for hearing me out, and thank you for hearing a little bit about what we do at MCE. Next slide, please. So Maryland Capital Enterprises actually started all the way over on the Eastern Shore in Salisbury back in 1998. Back then, we were working with small businesses only on the Eastern Shore, providing technical assistance, which I'll go into more detail later, and of course, lending. Our goal was really, I mean, you can put it into a mission or a vision, but we wanted to be a support system and a resource for small businesses and folks who are thinking about starting small businesses. In 2012, we moved over to this side of the bridge, what they call the Western Shore over there, and expanded to Baltimore City, Baltimore County, and Anne Arundel County. In 2020, we were awarded the designation as an SBA Women's Business Center, both in our Baltimore office and Salisbury. However, we all know what happened in 2020, so we don't have a physical office in Baltimore just yet, but we're looking to remedy that in the next few months. So for right now, all of our Baltimore work is either virtual or meeting at your location or a Starbucks or a Panera or someplace like that. Next slide, please. So the thing that most people want to talk to us about is money. And I understand why, because starting off a business, you need a little bit of money to get your foundation built. So we are a micro lender with numerous certifications, SBA, Department of Treasury, USDA, the state of Maryland, through Department of Commerce and through DHCD. We also get some funding from banks. But really, that doesn't matter too much to y'all, because what we're going to do is we're going to work with you. And if you're approved for a loan, we're going to figure out which pot of money makes the most sense for you, going to get you the best rate, the best term for your conditions, so that we can make it as easy as possible for you to start or grow your business. Then, of course, we also provide the counseling, training, and technical assistance, which I will go into a little bit later. But next slide, we're going to talk specifically about our loan products. There we are. So we have two slides on loan products. The first one is going to really focus on our two most popular products, and that's our new business loan and our existing business loan. And really the difference between them is the new business loans can range from $5,000 to $35,000. And then for anybody who's been around for 2 full years or more, you can go all the way up to $150,000. We also have the credit builder loan, which I'll go into more detail on the next slide. But for these loans, they can go for a term of 1 to 10 years, and it's really depending on the loan size. So I would say if you're going to get the $35,000 loan, think about a 5 to 6 year term. If you're up in the 150,000, you're thinking about an 8 to 10 year term. Our interest rates are set at 6 to 12%, but the truth of the matter is, since we've changed the interest rates on our credit builders, which we'll talk about in a second, I've not seen a loan go out above 9%. And if you're a woman-owned business, whether or not you're certified and you're approved, you will drop 1% on your interest rate if you're approved. These loans do require collateral in the full amount of the loan, but we can be very flexible working with you on what that collateral is. Of course, wholly owned property is the best. But we can use automobiles, we can use equipment purchased with the loan, we can use other people's property, we can usually figure something out. But all owners who own 20% or more are going to have to personally guarantee this loan. The upshot of that is that we report it to the credit agencies and your credit score will improve as you pay off this loan. I'll go in, as I said, the technical assistance in a little bit. All of that work is completely free, but once you're ready to apply, there is an application fee of $115 if it's a one owner, and then $15 for each additional owner. That pays off our the credit reporting fee and then fees that it costs us to do the application process. Just so it's good to know, we do run soft pools, so our credit pools will not impact your credit score. If you are approved, there are closing costs, which we just wrap up into the loan so we can work with you to make sure you're asking for exactly the amount that you want to walk home with. The rest of the stuff is pretty boilerplate. We take out the money every month from your account. There's no penalties for prepayments. So, you got a makeup line that you just started off in your house and Target wants to give you $1 million to be in all their stores. You can pay off that $35,000 loan right there and not worry about any of the interest. We do semi-annual site visits. That means twice a year, we're going to come out to your business. We're going to want to see a little tour, talk about how your business is doing, offer you any assistance that we can. And then also, if we see anything coming down the pike that might be a hurdle, help you get ready for that hurdle. Now, the big question is, what can I use this money for? And the answer is really anything business related. So build out of lease space or purchase space. You can use it for rent, furniture, equipment, working capital like paying people's salaries, paper, printers, all of that kind of thing. Really anything related to the business you are able to use. We're not able to do is, pay your rent for your house or your mortgage or things like that. So next slide, please. So the credit builder loan is actually a great idea from Bonnie because we all are collaborative here. Oftentimes folks who are just getting started out aren't looking for such a large loan, or folks who don't have a lot of credit or maybe have some credit issues in the past aren't able to borrow as much. So we created this credit builder program to be a quicker way to get some money in an emergency or in that type of situation to help you build your credit, build your business. This loan can go from $500 to $5,000, although I will say with the fees and everything, if you need anything less than $2,500, this might not be the greatest product for you just because it might get expensive. On a $5,000 loan, you're looking at a 2-year term, and the interest rate is currently set at 9% for everybody, man or woman-owned business. This loan requires no collateral, but if you have it, you're going to get a better chance of a yes. Everything else is pretty much the same with that loan, except for it's a bit of an easier application process, a cheaper closing cost, and a cheaper application fee. Again, no payments for prepayments, penalties for prepayments. I always mess that line up. And you are eligible, if your business grows, to get a second loan while you're still paying off this loan. And that's across the board with any of our loans. If you've been paying off 6 months, a year, and you have an opportunity, you're able to apply for a second loan with us. Same uses of funds, it's just a smaller use of those funds. So the next slide, we're going to talk about what really is our bread and butter. And I think this is something that a lot of folks don't take advantage of with CDFIs, and that's the technical assistance. We are able to offer you 100% free one-on-one counseling, in person and soon to be in person, but right now web-based training programs. We have a webinar series where we're doing at least one webinar every month. And a lot of those are really focused on reopening after COVID, or how to work in this new economy. And also one thing that we found that's been really important is self-care as a business owner. We're in a very, very, very stressful time, and you need to make sure that you are healthy both physically and mentally so that you can be there to run your business. And then we've also just instituted Let's Talk Tuesdays, which you can go to our website, marylandcapital.org, and sign up for, where we just have a few of our business counselors on every Tuesday afternoon. You can just come in, ask questions in a forum where you can network with other business owners or have an opportunity to sort of pull offline and go more deep. And so you can sign up for those. And as long as we've got 1 or 2 people signed up, we're doing them every week. So training topics can run the gamut. And here's one thing that's really great about us CDFIs is that we are very collaborative. We know what we don't know. So if we don't feel like we're experts in something, we're going to figure out a way that either another CDFI or service provider is going to be able to get you that better help. So what we're good at is helping you with business plan writing, either from scratch or if you've got something already that just needs to be changed to make an ask for a loan. We're great at helping with cash flow projections. We do require, for one of our larger loans, 36 months of cash flow projections. And if you've never done them, it can look daunting, even though it is actually pretty simple. We'll just hop on Zoom with you with a spreadsheet and do that first year with you just to show you how easy it is. We can help you get your MBE certification, your WB certification. We can help you understand financing and how your credit and how your business credit impacts that. We can talk about contract review and negotiations, especially coming out of the coronavirus, where that's going to be really important because rents are different and things have happened in the past where you might need to slow down on your payments. Of course, managing the impact of COVID and reopening, and really most business-related topics. And so this is something that I feel folks don't take enough advantage of. Even after you've borrowed the money from us, we're not going to stop offering that technical assistance. So anytime you have a question, come and ask us. If you've never borrowed from us and you have no intention to ever borrow from us, come take advantage of our technical assistance. It's absolutely free. Our goal is to help you open up your business. If you borrow from us, that's great. But our win is when you open and when you're successful. Next slide, please. So that was just the contact information. I've also put it in the chat so you can copy and paste it. Underneath of my contact information, there is also a link to our client intake form. If you'd like to talk more about what we do, you can either contact me directly or fill out that form. Once you become a client, you're going to have to fill out the form anyway, so you might as well just go ahead and do it now. And then we can start working with you to help you grow your business. I think we're going to be doing questions more at the end of the presentation. So right now, I want to give a small introduction to our guest, Miss Lizzie Jump at Amazing Spiral Comics and Games, which is right on York Road across the street from the Senator Theater. We worked with her to purchase the business from another owner and have worked closely with her since then, but I don't want to steal her thunder. So now I'll hand it over to Lizzie.
Okay, sorry. I wasn't sure if I was supposed to unmute myself or if the presenter was going to. I'm a talker, so I was just trying to be patient. Thank you, Nick. R2 and the Borgs. I don't have an official sign for my shop yet for the office. At any rate, hi. I'm Lizzie. I own Amazing Spiral Comics and Games. As Nick said, we are located on York Road, directly across the street from the Senator Movie Theater. And my story is pretty simple, actually. I was working for the previous owners, which was a married couple, and they were looking to sell the business. Amazing Spiral is Baltimore's oldest continuously operated comic shop. They've actually been around for, at this point, a little over 20 years, which in the comic book industry is significant. A lot of comic shops really don't survive past the 5-year mark. And so to have a shop be this old and known, I was very much interested in continuing the history of the shop. So I did not have any collateral. Hold on one moment, please. Sorry about that. I just happened to know Nick and talked to him about, I want to buy this business. And he said, I work in doing lending. And I said, great, because I don't really have any collateral, or I don't have a lot of collateral. I certainly don't have a lot of experience. And he said, I can help you. And this is where we went for it. The loan from MCE allowed me to buy Spiral from the previous owners, all of its stock, everything. So effectively, I bought a turnkey operation that needed some renovation and innovation to kind of bring it into the 21st century. And that's what I've been able to do. So now, we're the city's only explicitly sort of intersectional feminist, family-friendly shop, where you can come in, there's toys, there's games, there's collectibles, there's room to breathe and move around. One of my missions is to make it a very welcoming space for everyone, because I think comic shops can have a real stigma about who's allowed to be in there. Gatekeeping is a problem in the industry. So at any rate, I'm wandering off the topic here, but the loan from MCE was, I cannot understate how important it was to us, because without that, I wouldn't have the business. Because I bought the business in 2018, and then as I was submitting my SBA 7A loan, the federal government shut down. So I wasn't actually able to get an SBA loan for my first year of business. And then 2020 COVID hit, and MCE said, hey, you don't have to pay rent right now. We will work this out. We know you're shut down. And that was critical. I do not think we would have survived COVID without the combination of MCE and my landlord being very understanding about income. And that has helped us actually to thrive, because while profits are down because of COVID, my book sales are up, which I know sounds strange, but everyone shut down in their houses and was like, well, I'm going to read a book. So yeah, it's been really impressive. I see Bonnie chuckling. So I'm not quite sure what questions you might have. But the upside to all of this is we're positioned to really explode out in terms of success and profit once we're able to open fully, because we're also a games shop. So board games, Magic, Pokemon, all these things that you have to meet in person to play, which obviously in the age of a pandemic, you cannot do safely. So yeah, I know I've forgotten some things. I'm a little pushed here, but yeah, we are as I said, York Road, across from the senator. Here's our little logo. There we are. So come by sometime, and please feel free to email me questions or send them to Nick, and he'll get them to me. You know, if you've got further questions. That's about it.
Awesome. Thank you both,
Yeah.
Lizzie and Nick. There are questions in the chat, but we have 2 more CDFIs and 2 more business owners to hear from. So people are welcome to post questions in the chat, and at the end, we'll try to, you know, go through them one by one.
I have to dip out very quickly. It's a delivery day here, but I'll try to answer any like comic specific questions in the chat for you. Thank you very much, everyone.
All right, and the other thing for everyone to note is that the slides that you saw today, as well as the recording, will be sent out along with everyone's contact information. So if your question doesn't get answered today, or if you think about questions later, don't worry, you'll be able to contact everyone here and have all the information for a later date. So next up, we're going to be hearing from Fikru Ababy from Enterprise Development Group.
Thank you, Melissa. Good afternoon, everybody. Nice to see you here. My name is Fikru Ababy, Managing Director, ECDC Enterprise Development Group. This is an organization with its headquarters in Arlington, Virginia, along the Columbia Pike corridor, but we have also an office and staffing in Baltimore, as we see Baltimore as our flagship program. A little bit brief history about the organization. 3 milestone important dates to remember as far as the history of the organization is concerned. Number 1, 1983, which is in fact when the parent institution, Ethiopian Community Development Council, which focuses on refugee resettlement and placement, came into existence as nonprofit 501c3. And then 1992, this is the time when actually the organization received $25,000 from Office of Refugee Resettlement to start a microloan program. And then 2001 is when Enterprise Development Group became a nonprofit 501c3 focusing on micro lending. And the rest, to be honest, is really history. And as I talk, we have our 5 years organizational strategic plan, 2019-2023. And basically, again, the whole focus around this 5-year strategy is how do we really reach our target groups, specifically the low to moderate income group, the disinvested group across our geographical areas of operation, currently the DC metro area. And again, there are 5 priority organizational-wise. Revenue generation, definitely around providing competitive loan products and services, diversification, including in terms of loan products and services, creating visibility and branding as far as our operating landscape is concerned. How do we be able to geographically expand and reach those that are also in need? And how do we make ourselves organizationally effective and efficient to reach out to those groups again whom we really want to address? Next, Melissa. And okay, these are what I really went through. Next again. Okay, so what do we do? As an organization, these are the core products and services that we provide as Enterprise Development Group. We say these are integrated bundled services, kind of one-stop financial services and products, which basically include, in fact, knowledge and skills around finance and business, as Nick and Bonnie talked about in terms of technical assistance, pre and post loan, one-on-one coaching and counseling, and at the same time also provide group training face-to-face, and at the same time also virtual. The second part of it is providing capital, again, as part of microloan up to $50,000 US dollars, usually 60 months. It comes with 60 months repayment period, and on the average 7 to 10% interest rate. We also provide credit builder loan, 500 to 1,000 within 6 months to 12 months repayment period. And as you do repayment, we'll report the repayment to the credit bureau, which significantly improves, in fact, those who have a lower credit score. And at EDG, we always say there are no rejectees because of their credit score being low. And we have seen that, people who have really started with 300, 350 credit score came to us, gave them a credit builder loan 6 months, 1 year. Within 6 months, they have jumped from 300, 350 to 600, 650, which means they are ready now for the next, what we call step-up loan, which is, a loan for a small business, be it 15,000, 20,000, 25,000, depending on what kind of business they want to do and how much money they need. We also provide consumable loan, specifically car loan and personal loan. Car loan up to 10,000 because they use it also as income generation, including Lyft and Uber and so on and so forth. And at the same time, also for personal transportation, and then a personal loan as well, up to 6,000. We have also affordable commercial spaces for rental, up to 30 units in our Arlington headquarters in Virginia. We also do free tax preparation and facilitated self-assistance. We also provide outside the $50,000 micro loan capping. We also provide community advantage loan fund up to $250,000, 10 years repayment period, which is SBA guaranteed loan. Next, Melissa. So in terms of the real impacts over the years that Enterprise Development Group has been around, we have been able to reach over 2,700 small businesses and number of loans, provided over 37 million as micro loan capital, over 12,000 free tax assistance and clean served, and at the same time also refunded close to almost 8.9 million US dollars from IRS to the clients that we have provided free tax assistance. Spent hundreds of hours of TA training and coaching. And like I said, we have currently been able to provide to small businesses that want to kickstart their small business, specifically at the initial start of their business, where commercial spaces are very expensive to start their business. So we are currently providing, in fact, over 30 incubation affordable commercial spaces, and definitely hundreds of jobs created. Next, Melissa. Okay, we can leave this part anyway. Let's go to next. In terms of the geographical areas of coverage and income and employment and the demography that we are focusing on, definitely 55% of our geographical areas of operation is in Virginia, with 22% in Maryland and 23% in DC. I know we need to do more in Baltimore and Maryland. In terms of income and employment, we focus over 75% on low and very low income, and then 20% on moderate income and 5% above moderate income. Demography-wise, our current demographic statistics show we are focused on 62% African Americans, 24% Latinas, and 14% multiracial and others. Next, Melissa. Collaboration and partnership, we work with various organizations, including government at various levels, counties, states, federal, other funding organizations as well, foundations, the community colleges, and nonprofit organizations as well. Next. Well, challenges, I think this is more of an organization challenges in terms of how do we really optimize and reach out to as many needy population as we really want to address in our geographical area. So next. Same again, as part of operation issue portfolio concentration. As far as the enterprise development group is concerned, we have currently almost close to 60%, 65% portfolio concentration on transportation for several reasons. You know, probably because of the landscape that we operate in DC metro area. Next. Customer satisfaction, definitely very, very, very important. And then all about improving our identity and branding and visibility in the landscape. Next. Thank you so much. This is what I really wanted to say. As probably Bonnie outlined, the CDFI micro lenders are more of like character loans. It is based on trust, confidence, getting to know each other more, because these come with a great mission in terms of social services. So it's not about profit generation. We are not at all motivated by profit generation. So it's more of like, I can really say a character loan. Thank you so much.
Alrighty, thank you, Fikru. Now we're going to hear from Baltimore Community Lending borrower Vanessa Pyatt of the Pyatt Group.
Good afternoon, everyone, and thank you so much for this opportunity. It's wonderful to have an opportunity to talk about how Baltimore Community Lending has supported our business. Just in terms of what we do, the Pyatt Group LLC has been in business since 2013. We are a woman-owned business located in the Mount Washington area of Baltimore City. With expertise in public relations and public engagement. And our clients are in affordable housing and utilities. Our work has extended also to small business development training. We were involved for a number of years with the Baltimore City Wet Weather Consent Decree, working primarily with the Baltimore City Department of Public Works to help qualify and certify small construction firms to compete for $300 billion in utility contracts to upgrade the sanitary sewer system. Our other primary client was a developer who we worked with in developing affordable housing along the North Avenue corridor. Perhaps the most notable would be the Mary Harvin Center across from Southern Baptist Church that we were able to open 1 year to the day on the anniversary of its destruction by fire during civil unrest in 2015. Since then, we've been moving around in the Southwest Baltimore community, working with a local developer there on a number of houses and business establishments that they're working to open and make ready for customers and citizens who operate in that area just north of University of Maryland. I would have to say that Baltimore Community Lending is primarily responsible for me being here right now. At the end of 2019, we had pretty much wrapped up our work with the Baltimore City Department of Public Works in running their small business development training program. And we were putting some other prospects together for businesses who were looking to do some more business with the city, to compete for contracts in Baltimore City, working with engineering firms and construction firms. And we were moving along at a pretty nice clip until the pandemic. And at that point, while we had a number of prospects in play, everything stopped. And so our primary concern was how, number one, to pay the rent. Number two was to shift focus, pivot really, and to make sure that we were certified and qualified in the digital space as the world turned to virtual meetings, virtual learning, what have you. And so we were able to secure, and I heard Bonnie talk about how rare it is to secure grants, and we were blessed through our partnership and relationship with Baltimore Community Lending to secure a grant and a small business loan. And that was our first attempt to secure loan funds. We did not have any business debt, had never gone after any type of funding for the business. So it was a first time effort, and Baltimore Community Lending held our hand. It was a detailed process, but not a difficult process at all. And because we had, because of the documentation that they needed, we had that at the ready because we had just completed the state certification process. And so most of the documents that were required for the lending application was already at the ready and in a binder that we had. So the process was relatively easy. And that has enabled us to keep our doors open as we waited for the city to open up again, and for the prime contractors that we work with to get things rolling again. We actually have 8 projects in the works now. We just signed 3 contracts, and we just completed interviews for 2 additional ones, and we're heavily pursuing 3 other contracts. And so while the work was there, what we needed was just the support, the financial support to continue moving and operating as we were waiting for things to break open again. And so now as we move closer into construction season in Baltimore City, those relationships are now coming to bear as we get ready to work again. So my eternal gratitude to Baltimore Community Lending, to Bonnie and Melissa and Don, who worked so closely with us to make sure that we would be okay during an unprecedented season where everything was just shut down, and we were able to at least keep things afloat and keep going until things opened up again. And so one of the things I'm very grateful for is that even after we secured the loan, it was a continuing relationship. And so we're in touch all the time. And of course, we have the periodic review process just to check in and see how we're doing, which I appreciate so much, as well as the comprehensive process for the connection to Operation Hope. Someone talked earlier about the business plan and the cash flow worksheet. And so it's really a wraparound process to make sure that you secure the funding that you need, that you have the ability to repay those funds, and that your business is continuing to grow in this new environment, this new normal that we find ourselves in. So it's been a wonderful, wonderful experience, and our business is able to continue and to grow and develop because of a wonderful relationship with Baltimore Community Lending.
Well, thank you very much, Vanessa. Gonna send it back to Bonnie. You're muted, Bonnie.
Yeah. There we go. Thank you, Vanessa. That was a good, quite a testimonial. Appreciate that. Do you want to start my
Yes, I'm bringing it up right now. Thank you.
Baltimore Community Lending is a nonprofit CDFI that serves Baltimore City only. We've been making construction development loans for affordable housing, community development since 1989. In fact, in 1989, it was created as an agency of Baltimore City. And then in early 2000, they broke out as an independent nonprofit and qualified for the CDFI designation. So they've been making affordable housing community development construction loans for 30 years, when about 3 years ago, looking for ways to further stabilize neighborhoods. I mean, understanding that in addition to homes and buildings, you need small businesses, you need products and services, you need jobs, you need entrepreneurial spirit. They decided to pilot a small business lending program. So before we just started making small business loans, we decided to look at the main barriers for small business credit in Baltimore City, especially for Black owned and women owned businesses. And we designed our program around those barriers. We learned that since the financial crisis of 2008, inequality in business lending has gotten significantly worse. Small business lending by traditional banks is still about 20% below what it was before the crash, while lending to large corporations has increased by 5% in the same period. Loan size matters. As I talked about before, most banks want to make loans for over $1 million. Race matters. In the background of SBA 7A loans and 504 loans, while at least 50% of these small business applicants were owned by African-American Black business owners, they got 2% of the loans that the SBA made. Gender matters. Women account for more than 30% of small companies nationwide, but they have received about 4% of loans dispersed through conventional means. And when they do get a loan, it tends to be tougher terms and smaller loan amounts than their male counterparts, who may even have less favorable qualifications. Being located in Baltimore City matters. There's a lot of inequality here, and lenders are reluctant to make loans in Baltimore City. They're required by law to make loans where they make deposits under the Community Reinvestment Act, but instead of looking at Baltimore City, they define it as the Baltimore metropolitan area. So they can still make loans in the surrounding counties and check off that they've made loans in Baltimore. And while the same number of businesses exist in Baltimore City that existed about 20 years ago or 10 years ago, the percentage of those businesses that are owned by people of color and women has increased. And as the percentage of ownership increases by people of color and women, the loan amounts go down. And personal wealth matters. Most lenders, including CDFIs, do require 100% collateral. But in the entire state of Maryland, the people least likely to have collateral are women and people of color in Baltimore City. So we decided to design our program around these barriers. Next slide, Melissa. We learned that really the primary barrier is personal wealth. If you need $100,000 in collateral or $200,000 in collateral, you basically need to own a home. And there are many business owners in Baltimore that simply don't have it. Unable to get small business loans, they may run up their personal credit and tank their personal credit rating, or worse yet, take out predatory fintech loans online. So BCL is the only CDFI in Baltimore that makes loans to entrepreneurs who do not have collateral or do not otherwise qualify for traditional lending. Instead of requiring collateral, we require that all of our applicants complete a free small business training program. We learned that entrepreneurs can be really good at their craft, but that doesn't mean they know how to write a business plan or create financials. So our small business training program, we do work with some other organizations who provide training, and we provide it ourselves. It is one-on-one, it's free, and we meet you where you are. If you have a business plan and financials, that's great. Your small business training may be very short and sweet. If you haven't got a clue, we'll start from the beginning and work from you. We believe this is not only, a more equitable way to make loans, but just makes more sense that if your goal is small business success, that requiring training is the best way to do it. We offer, next slide, please, Melissa. We offer small business loans. Our emerging loan product is a small business loan of $10,000 to $50,000 to startups and emerging small businesses in Baltimore City. And we make loans of up to $150,000 to existing businesses that have been in business for more than 2 years. Our current interest rate is 9.25%. We do have a grant from Bank of America, actually, that buys down the rate for women-owned businesses to 7.25%. And as I mentioned earlier, CDFI rates tend to be between 6 and 12. So we're still really, we're in there, we're in the middle of that range, but we don't require collateral. And just for future reference, we are actively working on reducing our cost of funds so that we can in turn reduce our interest rate for our borrowers. But in addition to training, we require a written business. We want to see reasonable credit, but we don't have a cutoff number. If your credit score is below 600, we'll take a look at, we just want a good explanation of why. We look for a strong business idea, a good opportunity, and proof of concept if possible. And these days, in light of COVID, we also look at sort of the economic, overall economic situation, if it's something, a business is going to work under these circumstances. It's tough to open a restaurant at this time, for example, and certainly last year, there were a lot of businesses that just simply couldn't open because they couldn't open their doors. Next slide, please. So BCL is a forward-focused program. We meet, next slide, please, Melissa. We meet with borrowers 4 times in the first year, twice in the second year, and annually thereafter that, although we'll meet with you more often if we think we need your help. Melissa, can you switch to the next slide, please? There we go.
I think your screen might be delayed a little bit.
Oh, really?
Or maybe it's my screen. I'm not sure.
We mitigate risk by requiring that small business training, by requiring strong business plans, which we will help you write and put together, by looking at reasonable credit, and by providing follow-up assistance. That way we can get ahead of challenges before they become issues. And basically, we're partners with you and hold your hand through the process. As far as we're concerned, our success means our borrowers are successful, and we're very excited about that. Since our first loan closed in August of 2018, we have distributed almost $2.5 million in Baltimore City neighborhoods. That was 39 loans to 35 small businesses. 80% were to people of color, 66% have been to women, and so far there have been no defaults. It's only 3 years, but we're hoping to carry that success rate into the future. And maybe one day we'll be able to convince the traditional lending industry that they can take a chance on Baltimore business owners, whether they have collateral or experience or just really good at what they do. Next slide, Melissa. So this next slide, which hopefully you all can see, is my final slide. I wanted to introduce you to the team. We really believe in our entrepreneurs, and we really enjoy working with you. I'm the director of the Small Business Lending Program. We have a whole team that works in real estate construction and development that can help you if you're a contractor looking for to make a change in neighborhoods. Our small business lenders are Angela Izire, Don Cutright, and Curtis Pope, who are all happy to help you and are really wonderful at what they do. And then Melissa Badaker is mission control. She keeps us all moving in the right direction and basically keeps track of everything. She's the place to start. If you want to learn more about BCL and who the best person to talk to is, start with Melissa and she'll point you in the right direction. So that's it. I wanted to give a very brief presentation about BCL so we have time for one more business owner and Q&A at the end. So I'd like to introduce Dexter Carr. He is the owner of G Haven Sports LLC, an esports company in Baltimore. G Haven came to us through a referral from EDG. So again, we all work together, and that's where we learned about Dexter. Inspired by his love of the game, it gave him a way to make friends. He wanted to create a place where young and adult gamers could hang out regularly, regardless of background. Mr. Carr is motivated to show people that gaming is more than just a competitive sport, but that is something that can be used for doing good and making a positive impact on communities. So Dexter, why don't you wrap us up?
Yes, and that was actually a very great introduction. So I thank you very much, Bonnie. So yes, as she has stated, G Haven, our mission is to bring people together and was inspired by just the value of video gaming that came into my life and the friends and relationships and just the different values it brought to me. And I want to be able to share that with the rest of the world because we believe that video gaming isn't just a source of entertainment, but as well as it's a tool that can be used to do good. Now, in the beginning, when we came with Bonnie, yes, we wanted to create a space to bring people together to be able to bond through this gaming. And through the times of the pandemic, even coming off the pandemic, is when I was speaking to Bonnie and BCL more, like what we realized that, okay, how do we create a business model that not only allows us to continue to do that, but that could also transpire even in events like this? What do we do to be able to continue our mission? And so we made a little pivot of ourselves. And so G Haven, even though we started a gaming organization, we become more of a social impact organization where we empower and encourage what we call socially conscious gaming, which in plain terms is gaming with a purpose. So we now create opportunities and spaces that allow people not only in the gaming world, but those interested in video gaming to be able to engage in socially responsible activities, whether it be through just social awareness, whether it be charities, things like that. And so our focus now is to be able to be the pioneers of that as well. And with the money we were able to get from Bonnie and BCL, it allowed us to make that pivot. And I guess we could count this as one of my other first update calls. One of the things that we were able to, some of the milestones and achievements we were able to have through this loan. Well, first of all, we were able to solidify our a partnership with Kiwi Tech. They are a startup tech company, a tech company that builds programs and tech software for startup companies in the tech space. And so with that, we're able to create a program which actually share one of the user experiences with Melissa, so she can pull it up pretty quickly. So this is just a user experience to see what it's like. And when it comes up, it's called, I don't know if it's up yet because this hasn't popped up yet for me. Okay, there it is. So this is Game for Good. This is a web-based program that allows all users on the platform to conduct in socially responsible activities through the act of charitable donations and philanthropy. So it's very, very simple. If you want to scroll down really quickly to the middle section of the page.
It's scrolling, but I think there might be some type of delay.
Okay. Well, basically, I kind of explain what it is. So what you'll see coming down here is how it works right here. So we'll pause right here for right now. How it works is very, very simple and straightforward. First off, and this is for the gamers, gamers sign up, and how they sign up is they sign up through their gaming account. So if they PC stream through Steam, or they have a PlayStation or Xbox, basically they sign up using their account, and that allows us to connect their account with this platform, and we pull information of how long they play and the games that they're playing. So in a way, the best way to describe this first part would be very similar to kind of like a walkathon or a runathon, where there are different pledges that people can make based upon how long you walk or how far you run. This is more so pledging for how long you game. Now, game-a-thons isn't something that is new. It happens all the time. And people raise money based on some of these events. The trader streams, look it up on Google, you'll see a bunch of them. But these are normally event-based. These are like, once or twice a year or spread out throughout the year. What I'm creating, what this platform is not just an event-based thing, but a game-a-thon that doesn't stop. Whereas every time you pick up your controller, you're gaming for good. You're gaming for a cause that you care about. And so what leads to the next part would be when we have a list of causes that we're putting on there. And with those causes, you're then able to pick and play for them. And when you're the ones that are active, they're month-long campaigns. And every month we track the amount of hours that you play. And that is then able to, we take the hours in which pledging for the amount of money for whatever that the pledge translation would be, that money will then go to the charity cause foundation of their choice at the end of that month. And with that, the last two parts of that were more so is not just for that, but it's also a fun way of doing it for the users, the gamers as well, because depending on how long they play, they get points. And they could use those points to be redeemed at the marketplace, where they're able to use it to get different merchandise that are on our platform. Now, let's just say not the only that we have, but also our sponsors that we put on the platform as well. But let's just say you're not a gamer, but you're not big enough to be a sponsor, but you still want to give, you can. So if you could click on the join the fight. So this is a place where anyone could go. Granted, you'll have a little less information here, but you could be able to donate directly. Now, actually on this page, let's keep it on this page real quickly, because this is what the gamers will see. And now, even though G Haven every month will look at the amount of hours that are put in, and we will donate a percentage based upon that. So we're looking at the numbers right now, probably 10 cents an hour, even though it doesn't sound like a lot. When you think about the hours people play and the amount of people that be on the platform, numbers add up. But we have an opportunity that even though we're conducting, G Haven is conducting in socially conscious activities, we want to be able to give other sponsors, other companies who come on our platform the opportunity to do so as well. So really quickly, if you click the select the sponsor, the little drop down real quick, this is where different organizations could also join as well and have their own different pledging rates that they want to go for the particular cause. So they're not pledging per person, they're pledging per cause. So once again, separating that direct user interaction, more so focusing on what really is important, and that is the cause itself. So, and how it works, the user would click, let's say you go ahead and click 100, click the Red Bull one. And when the user activates it, so therefore every X amount of hours that they play, that this example, Red Bull will donate $100. And we could see how this interaction works. And so this is one of the examples of how we're looking to give back to the community. We're looking to create a platform that is able to give back and improve like the surrounding areas. And so and so this is just user experience. And with BCL's help, we're able to get to this point. And really quickly, if you could click cause name, so right next to the home cause name, so you click cause name, and you can click to the dashboard, so you can see the overall dashboard of it. Yeah. So there you go. So this is what the gamer will see. And so this is just the clickable user experience to see what it's like. And with the help of BCL, they've gotten me to this point. And I'm happy to say that right now, just we're talking with some of the other investors in Baltimore who I've shown this with, I'm currently in conversations. We're trying to get a larger amount of investment, because now I have a more tangible idea, more tangible product that not only is realistic, but can be shown and seen and used, and the impact that it could give, not just to Baltimore of itself, but to other areas as well, and the scalability of it. This couldn't have been done without BCL's help. And the amount I was able to get, the 50 grand I was able to get from them, got me to this point. And now they, with their help, which I'll probably talk to them later more about, I could be able to work my way to better approach some of these investors to get to an even higher state and more further along in my business. So once again, thank you so much, Bonnie and your team, for this opportunity. I know it was a risk, but like here is some of the here's just one of the many things I was able to get accomplished with your help. One of the other things, we're also rebuilding our website currently. It should be done relatively this week. Should be live for people to see what the new website looks like. We also have an esports team as well. So with gamers who are highly competitive in Call of Duty. Real quick. There we go. With people who are competitive in Call of Duty, but they also are people who believe in our mission as well and are helping spread that. So thank you so much for this opportunity to share what we're currently doing and this ability to allow me to start the process of taking a passion of mine and creating a means of valuetizing something that people only will see as just for fun, but creating a way that it could not only give back, but create a pathway where I could help put in, or how can I help integrate the culture of philanthropy and charitable giving into our culture in a very seamless and organic way.
Awesome. Thank you
Yeah.
very much, Dexter. It looks like there's a lot of excitement in the chat about that.
I do want to say, I'm going to interrupt you for a second, Melissa. If Dexter and Vanessa, and I don't know if Lizzie's still online, can put your contact information and your websites in the chat. You've got a lot of folks that are interested in reaching out.
Yeah, absolutely. Is your Dexter, is that website active right now?
So our actual website is should be live, because if you type in a website title, you'll see the old one, not the new one. What I just showed you, that is the user base experience. So that is for people to just kind of check out, get the feeling of it, what it is. That is available to share. So you can actually share that. So that link I'll probably share also on here as well. So for anybody who wants to like check it out for themselves, they can. I'll put my information here in the chat as well. But those experiences is available to be looked at and just played with. We're currently working on getting it coded, so that's kind of our next step right now.
Awesome. Thank you so much. So if we have about 8 minutes left for Q&A, if we don't get to answer your question today, you will receive a follow-up email with everyone's contact information, website, as well as a link to this recording. So we're going to get through some of the questions in the chat. And then if there's time, we can open it up. I think the first question I'm seeing in the chat is from, forgive me if I'm saying your name incorrectly, Bellish. Did you want to take yourself off mute and ask the question about the agent fee? And I'm not seeing, looks like you're not off mute. So the question is there an agent fee for a referral to help the customer apply for these loans?
Hey, Melissa, can you hear me now?
Oh, there you are.
Sorry.
Right. I can't hear him.
So I can take that.
Can you hear me now?
Oh, there you go.
Can you hear me now?
Yes.
Okay. Just wanted to know that the SBA has a program that if you actually help clients all these loans, small loans, there's an agent fee that is involved. I was wondering with the CDFI if there is an agent fee. As I mentioned, I'm an accountant and I help a lot of our clients, especially during the pandemic, to help them file for the PPP loans, SBA loan, EIDL loan. We find out later that actually some of these institutions, they also have an agent fee that actually they provide to us by helping our client file for this loan. So I was wondering if the CDFI has those type of agent fee for an accountant or for a facilitator to process those applications and file them with you guys.
Nick, did you want to answer that?
Sure, yeah. So for MCE, outside of the cost that I just described, which is the application fee, the credit check fee, so the $100 and then $15 per person, and the legal closing costs, there's no other fee, involved. And I think this is true for all CDFIs. Even if you take advantage of all of the technical assistance and then decide not to apply, there's still no fee.
I see.
I think if I'm understanding correctly, you want to know if we pay a fee, right?
That is correct. In so many ways, I don't want to refer to a commission, but it's a referral or called the agent fee. Like
Yeah.
for instance, Biz2 credit, Smart Biz credit, those type of agency. When we file all the loans for the clients, they have a back end agent fee that they pay for us for processing and helping it. Because some of the clients that we have, they have some issues with English proficiency. So we file those applications, we get all the documents, we upload them to the bank or institution or a trench or whatever they are, and then they actually provide us a fee within the county community.
We do not. I can tell you that. We do not. We do have a program where we pay technical assistance providers who provide the full-blown technical assistance for us, although so many of those folks, I mean, a few folks mentioned Operation Hope, et cetera. I think Vanessa said that. They're really at capacity. So we are doing it ourselves now and have our own technical assistance or training team. So typically, no, we don't pay referral fees. I know the SBA was paying people referral fees for helping with the PPP and IDL applications. That might be what you've experienced, but unfortunately, no, we do not.
Yeah.
And we don't pay any referral fees either.
Okay. I appreciate it. Thank you.
Sure.
All right. Next up, we have a question from Brittany. Brittany, did you want to take yourself off mute and ask your question about a home loan process?
So I mistakenly sent it as a direct message and someone answered it for me. But I've just been nervous because I want to begin the process, but I'm in the process of purchasing a home. So I was just wondering, should I do one at a time? Or is it possible for me to get funding during this process of buying a home?
So someone did answer that for you? What did they say?
Said to do to close on the home first, and then someone mentioned that they just did a soft pull. I believe it was MCE, and I was like wondering about that.
Sure. The difference is, I mean, I would agree with Don, who answered your question, to do one at a time. You'd be amazed at how many people come and apply for a small business loan when they just decided to, buy 2 Lexuses or something, which is typically does not reflect well on your loan application. But so yes, I would recommend that you complete one before you move on to the other. The soft pull is a type of credit pull that does not ding your credit report. So basically, when you have you pull a credit report for somebody, it shows as an inquiry. And if you get too many inquiries at one time, that can actually affect your credit. But a soft pull just means that you pull the credit report and it doesn't show up as a credit pull.
Right. That's why
also, in some cases doesn't give you all the information you need. So some lenders use it and some do not.
Thank you.
Yep. And I would add to that, if you're in a situation where, you're in the process of buying a house and an opportunity comes up that is sort of time-based and you can't wait until that's done and you need to apply for one of these loans, just be completely upfront and honest with both sets of lenders. Because if it's going to mess up your home loan, your home lender will let you know that, and you just may have to choose to let that opportunity go by. And on our end, knowing that, then we can sort of work that into, okay, well, her rent is probably this right now, but if she gets the home loan, she'll be paying this much a month, and we can sort of figure that in. But ideally, you would do them both separately. But sometimes an opportunity just comes up where that's just not an option.
Thank you.
All right, and we have another minute or so. Tavon has a question.
Yeah, hi. So my question is for pretty much all the lenders. So if I had collateral, let me start here. I guess my question is how big of a loan that I can receive if I have collateral, but haven't been in business for multiple years, but I have collateral. My credit is not, you know, up to date, but I have collateral. Though I've tried, let me give you a little information. I've tried with some of the banks, actually the bank that I'm going through now, Bank of America, and they have a criteria where you have to be in business for 2 years, 5 years to get any type of loan. So can anyone help me?
We could certainly talk to you, and I think if you have collateral, then both MCE and EDG, could talk to you as well. Feel free to reach out to anyone or all of us. But just from what you're telling us, I don't see any reason why we couldn't take a look and help you with that.
Sure.
We typically don't take collateral, but if someone came to us who we would normally say no to, but they offer collateral as a credit enhancement, sometimes that can get you a loan that we would normally turn down. But I really couldn't give you a credit answer without looking at your, the details, but we'd be happy to talk to you about it. Nick, did you want to jump in on that?
Yeah, absolutely. So we would not be able to go over our maximum load amounts. Even if you had a house, let's say it's worth $1 million and your business has been around for 1 year, we'd still only be able to do a $35,000 loan. But we could work with other CDFIs to do a package where perhaps 2 or 3 groups could get you up to the amount that you need, so that they're sort of all approved, contingent on each other, so you don't end up borrowing $30,000 when you need 60 and then your business fails and you owe $30,000. But if you all work together and get to where you need to be, we've done loans. Bonnie, MCE, and BCL have done loans together in the past. Where you try to set it up so that the terms and rates are as close as possible, and so that it just sort of makes sense, so it feels sort of like one loan. But unfortunately, if you've been around for a year or less, or 2 or less years, 35,000 is just the max that we can do.
I did not hear if you said a dollar amount that you were looking for, but our maximum for a startup would be 50.
If you've been around for 2+ years, you can get 150 from us, which is a huge jump.
Same here.
So let me ask this, and I appreciate. Is there a way where you can structure it where though you can the terms can be like maybe like half a year one amount, half a year another amount to add up to a whole amount, or like?
So I don't think we would do something like that. But if you had a loan and you were paying off really well for 6 months, and you could make an argument about why you need more, then you could get a second loan, but it wouldn't be guaranteed, because we wouldn't be able to make that approval decision until we saw the current information at that exact time.
So you mean the collateral, pretty much?
Well, it doesn't necessarily mean just for everything. Whatever the opportunity that you need the extra money is, it would be sort of looked upon as a new opportunity. But the fact that you've been paying the loan for 6-8 months, whatever that is, would be a positive on your application, because we can say, all right, he's paying this, he's doing great. This opportunity is going to make him this X dollars more and only cost him this much more, so it makes sense, But we need to look at it on an individual case, and we certainly wouldn't be able to guarantee it without seeing all of the information.
Understandable. Thank you.
Speaker, did you want to add to that?
Yeah, the only thing I want to really say is, it can really be customized based on, again, whatever information, experience, whatever you said in terms of collateral, et cetera, that you have mentioned. But at the same time, also, we can do step-up loan, depending on what kind of business you want to do, how much money you need. We can initially provide you like maybe 10,000, 15,000 that you really need for critical startup. Then add on top of it as a step-up loan, another 25,000, so on and so forth. So we can do it in steps, depending on, again, the customized loan that we want to do with you.
Thank you. You guys are awesome. I appreciate y'all. I have y'all contact information, so I probably be reaching out to all of you. Thank you.
Sounds good.
All righty, well, we have hit the end of our time. Thank you to all of our presenters, all of our small business owners. It was really exciting hearing from the small business owners and the great things that they're doing. So everyone here will receive a follow-up email that has contact information for the CDFIs as well as the small business owners. So feel free to stay in touch. You'll also receive the recording. And feel free to just, stay in touch and we look forward to working with everyone. Thanks for being here this afternoon.
Thank you.
Thank you.
Thank you. Bye-bye, everybody.
Thank you, guys.